All right, guys, we have a major effing problem. Whether this is a materialized effing problem or this is in actuality a problem, I cannot tell you, but Houston, we got a serious concern. There's a report that came out that Alameda Research, which is essentially the finance arm of Sam Bankman-Fried, who's also the owner of FTX and partial owner of pretty much everything crypto, is actually not as strong financially as we think. There was a report that came out the other day. The report was leaked financials from Alameda Research. It says that it had $14.6 billion in assets and it had $8 billion in liabilities. All in all, that doesn't sound bad. However, a lot of the assets that are being held by Alameda, first of all, has an inflated price. And second of all, most of the assets are Sam Bankman-Fried's FTX token or in some way, shape, or form, other tokens that are backed by Sam Bankman-Fried, either wholly or partially. And this is a huge problem. The FTX token is held by 10 addresses who hold 93% of all FTX tokens. On top of that, the volume for FTX tokens is just in the millions. And most of the volume is coming from FTX itself that uses FTX fees to buy up and burn FTX tokens, which means the entire footing and foundations of Alameda Research, Alameda Capital, and pretty much half of the cryptocurrency exchanges, half of the cryptocurrency hedge funds, and half of everything to do with mother effing cryptocurrency might just be crumbling right before our eyes. If you think that the Terra Luna collapse was big, this is gonna make that look like an absolute shrimp. This is an absolute black swan event when it comes to cryptocurrency. And to be quite honest, I have no idea what I'm gonna do. I really need to look in this a little bit more, dig deeper into the actual financials. Of the assets that was reported that Alameda has, and again, this is just rumors, this is just reports, this is not confirmed 100%, and you guys could do your own math. $5.8 billion was in FTX tokens, $2 billion were in investments in equity securities, I guess in some types of stocks, and $3.37 billion was in crypto held, like different types of crypto. This is the kicker, $1.2 billion in Solana, nearly 300 million of that was unlocked Solana, and 863 million was of locked Solana. So I guess the locked Solana is not so liquid, right? It's liquid but illiquid, if that makes sense. $41 million of Solana collateral, and around $320 million in the tokens SRM, OXY, MAPS, FIDI tokens, and FIDA tokens. And those are all in some way, shape, or form Sam Bankman-Fried's type of tokens. The kicker of the $8 billion of the liabilities, $7.4 billion is collateralized loans. Collateralized by what? FTX token. The problem is the FTX token that they're valuing, their value of the FTX tokens was valued at nearly 200% of the entire FTX market. This is a picture from CoinMarketCap. This report came out this last week. At the height of this week, the market cap of FTX was $3.5 billion. However, FTX tokens was valued at $5.8 billion. How is that possible? How is the accepted collateral for the FTX token much higher than the entire market cap of FTX? So you might say, Adam, but this report and these numbers were taken, I believe, at the end of July. So let's go back for 3 months. If you go back for 3 months, the total market cap was $4.3 billion or so when this was taken. Still, this was valued at $5.8 billion, significantly higher than the actual full total market cap of all FTX tokens. How is that possible? Now remember, it's not just that they have, or stating that they have a lot more assets than they do liabilities. It's that literally everything that FTX touches, literally everything that Sam Bankman-Fried touches, and literally everything that Alameda touches, which is half of the crypto market, is now supported by some pumped up Fugazi type numbers. Now you're going to ask me a question, Adam, how is this possible? Where are these things coming from? There's an amazing report right now, and they're basically explaining how everything works. You make a token, you buy the token, you pump the token, price goes up, investors are looking, they get excited, they buy into the token, and thereby the cycle keeps going on and on and on. And this is how you have this major black swan event. Now, there is more to this story like CZ and the CEO of Alameda. Let me show you the quick report, and then let me give you some more information and then give you some of my own personal thoughts. This report was written by Dirty Bubble Media. I'm going to leave a link to this down below. This is an amazing report, and you should definitely read this on your own. They cover a lot of the things that I was talking about. I want to specifically show you this right here. This is the basic architecture of a flywheel scheme. This is what I was saying. And again, I'm not accusing anybody. I'm just giving you guys the facts, the numbers, and you guys make your own decisions. You create a token. You pump the token price. You mark gains to a balance sheet. You show the gains to investors. You raise cash through equity sales or loans, which then pumps the token price, and it goes on and on and on again. And this is literally what can be happening right before our eyes. Now, this works as long as you don't pop the bubble, which then people are like, maybe this is why Sam Bankman-Fried was so excited to actually help out all these companies, to get companies out of bankruptcy, because it's all like a facade. If something collapses, then everything's going to collapse, and there's no money to actually pay, right? This is all popped up numbers. Now, let me show you what CZ of Binance has to say. As part of Binance's exit from FTX equity last year, Binance received roughly $2.1 billion USD equivalent in cash, BUSD, and FTT. I didn't know. I guess Binance was one of the investors in FTX. Due to the recent revelations that have came to light, we have decided to liquidate any remaining FTT token on our books. We will try to do so in a way that minimizes market impact due to market conditions and limited liquidity. We expect this will take a few months to complete. Binance always encourages collaboration between industry players. Regarding any speculation as to whether this is a move against a competitor, it is not. Our industry is in a nascency, and every time a project publicly fails, it hurts every user and every platform. We typically hold tokens for the long term, and we have held on to this token for this long. We stay transparent with our actions. And this was a follow-up because a lot of people got worried. Why are you doing this? Are you trying to collapse a competitor, even though he says he's not? And again, I'm not taking sides. I'm just saying these are the two behemoths of crypto right now. It's literally CZ and Sam Bankman-Fried. That's it. Those are the two main players, and then everybody else. Liquidating our FTX token is just a post-exit risk management, learning from Luna. We gave support before, but we won't pretend to make love after divorce. We are not against anyone, but we won't support people who lobby against their industry players behind their backs. Onwards. I guess he was talking about Sam Bankman-Fried, that he came out publicly that he wants more regulation, so on and so forth. And maybe there's something behind closed doors where Sam Bankman-Fried and FTX is somehow going against Binance. Now, Binance is really smart. He's really smart. He just bought $500 million worth, which is like 1.1% of Twitter. He gave like $500 million of the $44 billion deal with Elon Musk. Also, he's a majority stakeholder in Forbes magazine. A lot of people don't know that. He is very adamant in making himself look as legit as possible. Not saying he's illegit, but you understand what I mean? Like, give himself a nice, squeaky clean image, especially for a crypto company. And he's investing tons of money in the right places so that he can be engulfed into everything positive, engulfed into these huge, huge companies that have a lot of clout behind them. Now, to be fair, we're going to go from Alameda's side. This is from Caroline. A few notes on the balance sheets, info that has been circulating recently. That specific balance sheet is for a subset of our corporate entities. We have more than $10 billion of assets that aren't reflected there. The balance sheet breaks out a few of our biggest long positions. We obviously have hedges that aren't listed. Given the tightening in the crypto credit space this year, we've returned most of our loans by now. And same Caroline, she says, CZ, if you're looking to minimize the market impact on your FTX sales, Alameda will happily buy it all from you today at $22. Now, if you look at CoinMarketCap, this is FTX token. It's very, very funny that FTX token is trading at $22.25 space is just in front of Algorand. Algorand is catching up. Now, FTX, as you can see, is down nearly 7% just for the day and down over 13% for the last 7 days. Guys, at the end of the day, this is starting to collapse the crypto market. The entire crypto market is starting to go down. It's actually now down 2.87%. And it seems like anytime we get any type of traction whatsoever in this shitty bear market, some shit happens. However, if Sam Bankman-Fried collapses, if Alameda collapses, if FTX collapses, if any of this is even remotely true, we are absolutely full-barred. 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 Because I can't curse, so I'm going to keep saying full-barred. But you know what word I want to say. Guys, I'm going to keep you apprised of the situation. Thank you so much. Down below in the comments, let me know what you guys think. And when you're down there, hit the like, share, and subscribe if you want more content like this. Thank you, and have a great night.